Hey everyone, the professor here, and welcome to today's crude oil and natural gas analysis video. What an amazing Friday for our trading members inside of the trading club. So before we get started on the analysis, let me kind of walk you through what happened on Friday. This is also a sneak peek into my trading club. And so this was the first alert that was put out inside of our trade alert section. You can take a look. This was for those individuals that were going to trade pre-London or London session. And then when we take a look as we scroll up as they update in different chronological order with different trades, we can see here that price had begun to respond exactly right into the zone as we talked about it, but it gets even better. And again, these are just some other trade alerts that were posted in there. You can see now here we had an update, talked about continue selling crude oil based on structure until the cows came home. And then we continue to update our members with crude oil and other trades as well. But again, we saw these liquidity zones started to be taken out one by one. So by this point, there was over 100 points on crude oil, and the cows were coming home into our second profit level. But wait, there's more. Then we provided an update into the next liquidity zone while the cow was there just watching price melt away on crude oil. And wait, there is going to be more. Finally, we had price come all the way home and eventually bounce off that support level. So again, this kind of gives you an idea of what we do inside of the trading club. You're getting a morning analysis, and then you're getting an updated evening analysis for those folks that might be in Europe or in other countries, or just for anyone in general who might be trading London session as well. So I hope that you will join us. You can head down, if you see at the bottom of the screen, to theprofessortrades.com. Find a plan that works for you. Super cheap, but the value that you're going to get is what I enjoy doing each and every day. I love it, and that's why I am here doing what I am doing. Okay, so today I'm going to be covering, obviously, crude oil analysis from top to bottom. We are going to fully analyze that particular symbol. And then as a bonus analysis, we are also going to cover natural gas. So hopefully you'll watch both analyses. You'll leave this video understanding price action on both of these charts. But if there's only a specific chart that you are interested in, you can definitely go down below to the timestamps. So my plan for you today is very simple. I want you to learn the key zones for each chart. And then I also want you to feel better about your trading decisions as we begin to approach a brand new trading month. This is going to be the end of July. And so there's a couple of key things that we have to look at. If this is your first time to my channel, let me welcome you. Let me tell you just a little bit about who I am. I'm a college business professor with over 15 years of teaching both graduate and undergraduate students. And I'm an investor and a trader. Started trading over 8 years ago. I struggled for my first three and a half years. It took the right mentorship, the right community to finally turn things around for me. And so eventually turned into a six-figure trader. And now my goal, on top of just continuing to trade and provide for my family, is to be able to give back and give back strategies, tools, and very importantly, psychology tips for those that are just starting to trade or even for experienced traders. So I hope you would join me. And if you get some value on today's video, don't forget to like and subscribe. Okay, so let's go ahead and start on the monthly chart. Again, we are at the end of July 2024. We got a few days left. So very important. And this is why I've been so bearish on crude oil over the past couple of weeks and why I have not chosen to buy crude oil. I've only been waiting for the oil setups because we do know that trading with the trend is much, much easier. And even though as a scalper, sometimes we can take some nice reversals off strong areas of support, it's just so important in today's markets to try to do your best to stay with the trend. So we are here on a monthly chart. We can see here right now that we right now have basically, as of now, kind of closed. And again, we're not closed because the month is not over, but we have basically begun to go below what were the last couple of candlesticks that were right here, the bodies of these candlesticks. Now, I have been kind of talking about over the last couple of weeks that I thought we would see somewhere around this 73 to 72 price point being hit, that they would come back for that wick. So let's see if that possibly plays out as we go into late July and then in August. If you're a futures trader, as many of us are as well, we know contracts are filled a lot at the beginning of the month. So again, this is just kind of a perspective on the monthly, okay, that we are seeing still that downward pressure, and you're better off just staying with the trend for crude oil right now. I don't think we've hit the bottom right now on crude oil. So let's go ahead and remove that. And now let's kind of go into the weekly perspective here. Okay, so we've had a couple of 3 weeks now that we've been on the downslide. And again, why we were staying bearish, okay, because of these nice large candles. We started to sell right here is where I became bearish. It's one of the strategies that we use in the club, one of the strategies that we teach you in the club. As you can see, there are no indicators on this chart. And I think eventually, that's kind of the place that, you really want to get to where you don't need 15, 30 indicators, right? I like to trade what's called naked Forex. I just look at price action. We have a couple of fairly easy strategies that require basically no indicators that we teach you inside the club. And again, that way, if you need a particular indicator, you can add one or two for maybe price direction if you're not sure on the smaller time frame. But in reality, if you're sticking to the higher time frame, there's very little that you need, and we'll teach you all of that as well. So kind of focusing here on the weekly, we saw that break of structure there, and then we began selling crude oil at that particular point. So let's go ahead and take a look at this Fibonacci level. So this is the one thing that we do use a lot, the fib levels, okay? Because the fib levels gives us a perspective. It also gives us trend changes, and it gives us opportunity to start looking for price action on a smaller time frame, but we have to have those confirmations with the bearish or the bullish engulfing candle. Now, this is kind of the wick that I'm kind of talking about, that will we come back to take out some of that liquidity in that particular wick there that was back during the week of June 3rd of this year. I believe it's very likely that we're going to probably come down towards that 88% fib level on a higher time frame. And again, we shall see now, because we trade what we see and not what we think, right? I am not stepping in front of these candles right now. I don't believe this is the low, but we'll talk more about that as we progress through the time frames. So let's head over to the daily. And again, we can see here now on this daily chart, okay, I'm just going to remove the fibs so it's a little bit clearer for you, okay, that again, there's kind of the targeted area that we are targeting, okay? And the reason I also say that is because if you look at this one candle and two candles, okay, these two candles, in my opinion, have some unmet liquidity, which they're going to want to come back to grab, okay? And again, we talk about liquidity, and we talk more about that inside the club and what that means and everything else. But we also have now this kind of bearish engulfing candle with the price action that happened on Friday. So again, even though we see here that we've got a couple of wicks that have already rejected, this candle right here is a pretty strong candle. And again, leads me to believe that we still have some more movement down to the bottom when it comes to crude oil, okay? Now, when we slide over to the left, what I want to do now is I want to kind of hit this level right here. The reason why is because we had a couple of pain points, meaning points of where price hit, rejected and went up, price hit, rejected and went up, price hit, rejected and went up. So I don't want to discount this particular area. And this is basically, what we are doing, and is why I kind of like, the higher time frame, is that we can kind of sit on these higher time frame, and we're looking for more moves. And again, there's a strategy that we use. We go in with 2 entries. We are securing profits after 20 ticks or 20 pips. we're securing that one account in our 20 pip challenge, and then we're allowing a runner to go. Meanwhile, your risk is exactly the same. So if you're risking 2%, we're just breaking that down into two 1% entries. And again, these are all strategies and tools that we kind of help you with, especially if you are just starting out. So we are going to wait to see what happens here at this level. This is going to be a very important level because we could possibly see, right, that rejection of that level and then price bouncing back up to now grab some short-term liquidity of this candle. And so for me, I'm looking for this retracement up because I'm going to stay bearish. I'm not going to get in the middle or in front of this train right now. I'd rather wait for the next movement up or retracement. Okay, and we'll give you those levels as we progress throughout the week, and then look for the next sell opportunity. Now, if we do get a candle to close down below here, when I'm going to talk about a candle, I'm talking about a good 4-hour candle, then at that point, what we're looking for is we're looking for price to give us possibly a retest of this area, and then looking at price to come down to eventually meet this unmet liquidity. And again, liquidity could be the whole thing, 50% or 30%. So I'm just going to kind of put a blue line right above this candle right here. And I'm going to say that's going to be a shorter term target area once we clear this particular level. Okay. Once we get a candle to close below that level, and it could become a very strong bearish candle like this. If we go over to the left, this is a very volatile price zone. As you can see here, the candles are not small. They have quick movements. So this could be one 4-hour candle, one daily candle, one 8-hour candle that shoots below, and that liquidity will be met. And this is why I want to walk you through the different time zones. Okay. And so hopefully you're beginning to understand price action on a bigger time zone, because this is where the institutions are trading. They're not trading on a 15 or a 30-minute. They're trading on a higher time frame. And so most of us who are retail traders, sometimes we sit too low in a time frame trying to scalp, and it works. But if you're going to try to catch the bigger move, okay, this is where you want to be on the daily or the 8-hour chart. So now let's start looking at this on an 8-hour time frame so we can kind of begin to see the different areas of price action. So this is what I was talking about before, right? We are going to look for a candle like this to basically close below on a 4 or 8-hour, and then eventually come down to eventually what I think will be this liquidity targeted area on a higher time frame. Does that mean it's going to happen Sunday or Monday? Absolutely not. It's only going to happen when this scenario plays out, that we get a candle to close. And I like the 4-hour or higher candles. You're going to see a lot of fake outs on the lower time frames. Okay, so what can we kind of expect off this 8-hour chart? Now, again, if you look right here, okay, we've begun to see that we've had previous rejections and reaction. And now we kind of, on Friday, we closed with a little rejection. Again, understand that on Sunday, there is going to be possibly a gap. And so a gap would kind of change things. And I kind of want to go over kind of the gap scenario. If you have a large gap that happens on a Sunday market open, understand that these zones stay in play. What changes is, do they come back and close that gap within a few minutes, a few hours, a few days, or a few weeks? Okay, so the zones will not change. And again, if you're inside the group, we do live analysis Sunday nights at 6 o'clock. So we can look at the gaps, not only for crude oil, not only for natural gas, but for all the indices as well. But these zones will stay the same. So we're going to wait to see here, right? We don't guess. We're not thinking what it's going to do. We allow price action to tell us in which direction they're going. Okay. And here's an example right here. If we kind of zoom in right here, right, where this, buy began to happen. Okay. This is part of my passion for teaching is right here, is because this candle closed. This candle right here was that bullish candle that closed on an 8-hour time frame above this level. Once that closed, look what price did on this wick. It came back to retest, and then we were off to the races, right? So as we get into this area, That's what we are looking for if we eventually are going to stay bearish. Okay. If we are going to go long from here, then we are going to need a candle to show us some type of bullish movement in order to go longer on a higher time frame. Okay, so that setup would look something like this. If this is going to go back up and go long in a position, we need kind of a temporary structure break. Okay, kind of right in this particular area. Okay, so this would probably look something like this. If you were going to go to the long side, trying to take this back up to the next level, right? You would have to then look below this low and kind of go to about this area right in here. So it's kind of a 1.5 to 1 scenario. But again, that would be kind of a buy stop scenario that would happen once a large time frame candle like a 4 or 8 hour closes above that level. Okay, if that happens to close above that level, then this particular scenario would be what I call a buy stop, okay, with a close. Again, these are the type of charts that you're going to be seeing in the group once you join us. So you have all the information that you need. Okay, so that's kind of the buy stop with a close. Once price closes above that level, then we might see a retest, but then we're looking for prior movement to go back up. And again, a good example would be kind of what happened in this area. Here it is right here. Okay, we had that same movement up, came back and retested, and then we went long from that position. So that's what we'll be looking for on crude oil on a long position. And then we've already given you kind of the scenario, okay, for a short position. Okay, that short position, once we get that close, then all we do is kind of just flip the perspective, looking to go in here, bringing this maybe to the high, and now trying to go down to the next major structure point, okay, which would really be all the way down here. Now, again, does that mean it's going to go all the way to the green level at the bottom? No, but we secure pips in our first entry after 20 pips, and then we go from there. So this would kind of look like where if we do get the retest, where you're looking at a scenario where, you're going to wait to close underneath. So you'll probably be looking at an entry there. And then here, we just turn this around and this becomes kind of a sell stop, okay, with a close. Okay, and that's how we take price from level to level. But the key thing here is to remember this, is that with the strategy that we use, we never let a loser turn into a winner, right? You cannot pay your bills by going break even. So that's why we secure 20 pips or 20 ticks. We take that money off the table. We put that in our special account to grow our account for 20 pip challenge. And then once you're in profit for 20 pips, you move your stop loss into stop profit. So at worst case scenario, if crude oil wraps back around, which it does, or it wicks, which it does, then you at least can walk out with a couple of pips, enough to cover your spread and your fees. And guess what? We look for the next setup. That's how you protect your capital, and that's how you grow account over time. This is the exact same strategy whether you have $50 in an account or you have $50,000 in an account. If you do this over a duration of time, you will be very profitable in trading. What happens is everyone's trying to hit the home run. Everyone's trying to buy that new house tomorrow, and this takes time. I'm going into year number 9, and I really feel like I really began to understand this maybe 1 or 2 years ago. And every day is still a learning day, especially when it comes to trading psychology. So this is a long term. We have kind of a running joke inside of my group where our members have asked me, hey, how long are you going to do this? And I've been open and honest with them. I'm 54. I'm running this till I'm 62. And after that, I don't plan to trade anymore. I want to be able to give value to our members, to our community for the next 8 years. And that's why many of them have kind of done the yearly plans, the lifetime plans. I'm going to be around to give you value and be able to help you grow a small account or just continue to build off your larger account. So that's kind of what we're looking for there on crude oil. Again, the benefit here is that you are going to be updated inside of the group, as you can see earlier. So if you are not in the group, then I would definitely pause this video, mark up these levels, maybe go back and watch it again where I calculated the buy stop or the sell stop, get those levels in so you have them on your chart, set your alerts so that you can be ready to go. And again, if there's a market gap, okay, these will still be in play. And it could be that the gap opens and closes real quick. And again, we'll look at that live inside of our community on Sundays at 6 p.m. Okay, so now we are going to start our transition into our natural gas analysis. Hopefully you trade natural gas. And this is one that you have to be very, very cautious with. So natural gas, as it's referred to as the widowmaker, is one that you have to use a lot of caution if you're going to trade it. You definitely have to trade it with small micro lots or small Forex lots, because this one could eat you up alive. And so when it comes to natural gas, I don't play around with natural gas in the sense of looking for long moves. For me, I am 100% a scalper on natural gas. And the reason why is because natural gas plays by different rules. There are still gaps open all the way back from January that haven't been closed. Okay, so if we were to go back all the way to January, we're going to find open gaps all the way up here that still have not been closed. And that's May, go back to January. And so these are just some of the newer ones that we have seen here. So there's still this open gap area right here that still has not been closed. And I'm going to kind of label that here. And again, this is going back. Oh, this is the one. I'm sorry. So this is the one from January 4th of 2023 that has not closed. Okay. January 2023 that has not closed. So understand that we still have a lot of gaps there. Okay. Here's another one. Okay. That has not closed right here. This is another open gap. And this major gap is from November 2023 that hasn't closed. So as you go through these daily charts, you will look at these and you will still find open gaps. So you have to be and use a lot of caution when it comes to natural gas. So let's take a look here at the daily. And actually, let's jump over into the monthly. So you can see here, right, that you probably do not want to try to buy this right now as we head towards the end of July 2024. There is a lot of movement down, and this candle is not going to flip on us. Okay, so that is kind of where we are at with natural gas. Trying to buy natural gas right now could be a major disaster for your account. So let's go over into the weekly chart here. It's going to take a look at where we're at. Okay, so we are, kind of quickly approaching down to this 159 area. We had another bearish engulfing candle there. We'll put a Fibonacci on it just to kind of get perspective where we are at on that fib level. Okay, this 88 area is typically when we begin to look to see price action, because we're looking for some type of bounce between the 88 and the 100 area to try to take price back up. Of course, if they close below this level, then you're usually going to extend into the 127 Fibonacci extension. So it just kind of puts a perspective of where we are at. Now, if we look at where price is right now, we squeeze the charts. Okay, you can kind of see here right where price kind of closed, right, on a smaller time frame. We can consider that a level. We can see here previous support, previous resistance, previous support. So we are at a strong level of support right now, but do not trust that level of support, because what's been happening on natural gas, especially, we have been seeing some pretty huge gaps on almost on every Sunday, right? And they will not close within a few minutes or even within a few hours. So this is the one symbol that I personally do not even trade the gap on a Sunday. It is just too risky. It is too dangerous. Once I start seeing price action turn in that direction, then I feel more comfortable. But just taking a trade because there's a gap, you could keep that trade open for weeks, months, or as you can see, January 2023 is still open. So let that be your determination why you don't just jump into a gap blindly. So we are kind of looking at this area here, and this is going to kind of be, again, fairly simple. And then if you look right here, okay, and you need to confirm this with your broker, there is a very small gap right here on this chart. Okay, you can see it right here between these two candles, not even the wick hit there. So are they coming back for that gap? Well, if they close down in this area, okay, then they're going to come back down and close that gap. And we'll begin to see that on a smaller time frame. Okay, so now we're here at the daily. Again, this was fairly, nothing is fairly simple in trading, but again, we just had kind of one of the things that we talk about. Once we had that structure break, we were off to the races and nothing but sells happened at that point. Okay, everything is about price action. You're not seeing indicators, you're not seeing anything else other than just naked Forex and price action. So that is going to be super, super huge as you look for price here. What is going to happen at this level right here? Okay. For me personally, if this bounces up, hey, that's great. Okay. Because I personally would not look for a longer term buy until we close above that 2.28 level. Okay. This will be too risky. That price can possibly bounce up. Okay. Real quick. And then eventually come all the way back down. Okay, so now that we are looking at the 8-hour chart, again, this is going to be one of those things that you are going to look to see if we get some type of price action here, okay, to head back up. If we get that candle to close on an 8-hour or 4-hour, okay, then we're expecting that the next major target is going to be right here. And I always use blue as my target areas because we can see that this has been a supply and demand zone already on 3 or 4 different occasions. So that's going to have to be the price action that you are looking for when it comes to the bigger time frame. For me right now, I prefer that price comes further down because at least you have a little bit of a margin for error if we're going to start buying from the lower levels. And again, natural gas is definitely one of those things that you want to stay connected when it comes to the fundamentals. You do want to stay a little bit more connected on news events that are impacting natural gas as opposed to the other symbols, because natural gas, as we go deeper into the summer, the question will be, will there be a greater demand for natural gas or less of a demand for natural gas? So those are things that you have to pay attention to if you are going to choose to trade, this particular symbol. So on a big time frame, this is going to be a key area that we are looking for. How price is going to react here in the interim, okay? And again, if we fall below that level, okay, it is very possible that as we go from level to level, that then they eventually come back to possibly retest this low all the way down here, which was created back in February 19th. And at the same point, they take out this open gap that's down at about 1.7335. So again, all these updates, all these charts are provided to you inside the club as we break this down daily to be able to scalp the natural gas versus trying to take a long-term trade like this. But again, if you are looking to swing trade natural gas, you need to let this swing trade it back up. Then you need to let this fall further down. I would not take a position now because I do see possibly larger movements down with more gaps, as I just realized here that there is a small gap right here as well. Okay, so this could be the very first gap that they target right in here. Okay, so I hope you got some value on this video. You can see the new addition in my background. Don't ask me, my kids said to put a fluorescent light because everybody's putting a fluorescent light. But anyways, I hope you got some value on this video. If you did, hit that like button for me. This older guy would appreciate it. And again, if you're brand new to this channel, hit that subscribe button, hit the notifications bell. We are going to be giving you a lot of content, both on YouTube Shorts to help you learn if you're just learning about trading. I'm providing weekly quizzes, 2 to 4 of them a week, so you can begin to learn some of the jargon, some of the terminology as you explore trading. And we're going to be giving you some tips and also some short-term trades through YouTube Shorts. So you don't want to miss that. So you want to hit that notifications bell as well. And I hope to see some of you join us inside of our trading club so you can take advantage not only of our community, but the community chat, the live trades, the daily analysis, but more importantly for your growth. Because as I said at the beginning of the video, trading is hard, but trading in a community is much, much easier. You build friendships, you build camaraderie, and you build friends for life. So again, hope to see you in there. And again, hopefully you will visit theprofessortrades.com. Check out the plan, super affordable. Come in and join us. And what's the worst thing that can happen? You don't like the experience, you can cancel your plan at any time. But again, our retention rate is over 97% because we're doing something right, because we're putting you first. Thanks for watching. Have a great week trading.